Welcome. In this video, we will look at whether this is the lowest price for XCN coin or what kind of movement awaits us from here. Please watch to the end so you don't miss anything. If you subscribed and liked it, I'm moving on to the video. First of all, when we look at the price action, we see that a flag pattern was formed earlier on the chart and the price broke this flag pattern to the upside and continued its uptrend. Flag patterns usually occur during an uptrend and result in the price consolidating for a while, then breaking to the upside and continuing its move. This is exactly what happened in the previous flag pattern, and the price made an upward breakout and rallied sharply. At the moment, a different pattern formation is noticeable on the chart. When we analyze the price action, we see that this time a descending wedge pattern has formed. Descending wedge patterns are usually among the patterns that give a bullish signal and indicate that the price is getting squeezed and its range of movement is narrowing. This type of pattern shows that the price is moving within a certain falling channel, but the upper and lower lines of this channel are getting closer and closer to each other. This means that the price is squeezed and heading towards a decision point. The important thing at this point is whether the price can break the upper line of the descending wedge pattern. If the price breaks the upper line of this descending wedge pattern to the upside, it's a strong, bullish signal. This is because descending wedge patterns usually work as a trend reversal pattern and result in the price initiating an upside move. The upside breakout of the pattern usually occurs on a volume move, and if there is a significant increase in volume during the breakout, the bullish move is expected to be much stronger. However, since the price is still moving inside this descending wedge pattern, it is not yet possible to say that a breakout has definitely occurred. In other words, the price is currently experiencing the squeeze process and may not have reached the decision stage yet. Another point to note here is that there is also the possibility that the price may break this pattern downwards. We need to be patient and wait and see the breakout. Another important structure on the chart is the bowl pattern. Usually, dish patterns are patterns that indicate that the price is recovering from a low after a period of decline and may start an upward movement afterwards. Such patterns can give strong reversal signals, especially on longer-term charts, and can provide an important backdrop for a rebound. The bowl pattern currently on the chart shows that the price has been declining for a long period of time, but then started to stabilize at a certain low. The bottom of the bowl is usually considered as a rebound zone, and the price will fluctuate at this level for a while, gathering strength. This process indicates that traders have started buying at the bottom, and the price is preparing for its next bullish move. The fact that the price is currently at the bottom of the dish strengthens the possibility of an upward reversal from here. The target of a dish pattern is measured by the depth of the pattern. In other words, a bullish expectation can be formed by the distance between the highest point and the lowest point of the dish. If the price initiates an upward movement from there, it is expected to rise up to the initial level of the dish to complete the pattern. However, in order for the dish patterns to work properly, the price must make an upside breakout and cross the top of the dish. If the price breaks the top of the dish strongly, the pattern is complete, and the price is expected to move towards the target zone. The fact that the price is currently at the bottom of the bowl increases the possibility of an upward reversal from here. However, whether the price can find enough support at this level is an important question mark. If this area works as a strong support and buyers step in, the price may start to move upwards from here and move towards the upper region of the bowl. However, if the price fails to find enough support at this low and a downside breakout occurs, the dish pattern may fail and the price may move lower. So if we see that the price completes upwards from here, the chances of completing the pattern will increase even more. Another important structure on the chart is the uptrend that has just started to form. Trend lines are very important tools for understanding price movements and determining direction. Right now, price's effort to form this trend is crucial to see if the uptrend will continue. Uptrends are usually formed when the price makes successively higher lows and higher highs. This indicates that buyers are becoming more dominant in the market and the price is gaining upward momentum. The uptrend we see on the chart right now is still very new, as there are only 2 points of contact. This shows that the trend is not yet fully established, but if the price holds here, it could become stronger. Uptrends also play an important role in creating support levels. If buyers step in every time the price touches this trend line, the strength of the trend increases and the price can continue to move upwards. However, it is important to keep in mind that the trend is just starting to form. We only have 2 touch points, and for this trend to be valid, the price needs to maintain this line and make the 3rd and 4th touch points. If the price comes back to the ascending trend line and rises on a rebound, This trend line will become a more solid support, indicating that the upward movement could continue more strongly. According to the Elliott wave theory, we see that an important structure is currently forming in the market. Looking at the chart, we can say that the price has completed the first wave and is currently moving in the second wave. In the Elliott wave theory, each major trend consists of 5 waves, and these waves have certain rules and patterns. The fact that we are currently in the second wave may indicate that we are very close to the start of the third wave. The second wave is often referred to as a correction wave and is a period of profit realizations in the market. After the sharp rise in the first wave, traders usually take their profits, causing the price to pull back a bit. At the moment, it is possible to say that the price is in the second wave. However, the important point here is where exactly the second wave will end. If the price reacts from important support levels and there is volume buying, it will set the stage for the start of the third wave. The third wave is usually the strongest and longest wave according to Elliott wave theory. It is the wave with the most momentum in the market and where traders make the most gains. When we look at the Fibonacci levels for the target of the third wave, we can say that at least 1,618 should be seen. However, since third waves usually show more volume and strong bullishness, they can even extend to the green line and blue line levels. So, if the price makes a healthy second wave correction here, followed by a strong buying reaction, then we may need to move our targets higher for the third wave. The second wave may be a bit sideways and boring, but the reward will be big. I'm splitting the video very short, friends, because I came to you with an exchange where you can safely trade XICN coins. This exchange is the Onyx exchange. And now, Onyx has more than 1 million users, and you can trade without the need to KYC. When we come here in the search field and type XCN, it comes out directly and you can buy and sell from here. And if you want, you can also do leverage trading here. And all of this can be done without KYC. If you want to register at a discount, the link is in the description. Now let's continue with the video. When we look at the RSI indicator, we see the presence of a downtrend that has been putting pressure on the price for a long time. This downtrend in the RSI is an important factor that makes it difficult for the price to move upwards. The RSI, or Relative Strength Index, is one of the most important indicators guiding traders' trading decisions, and usually works in tandem with price movements. However, in some cases, the price may move sideways or slightly upwards when there is a downtrend in the RSI. In such cases, a break of the downtrend in the RSI can be a harbinger of a major uptrend. For now, we observe that the RSI has a falling trend line with 3 contacts. That is, the RSI has touched this trend line at 3 different points and has retreated each time with a downside reaction. 3 contact trend lines are usually considered strong resistance. So, although there is a possibility of a reversal from this level, if the RSI manages to break this trend upwards, a new bullish move could begin in the market. This downtrend in the RSI puts not only the RSI itself under pressure, but also the price. Because as long as the downtrend in the RSI continues, investors' confidence is not fully built, and a strong buying wave cannot be initiated. But for this to change, the RSI needs to break the falling trend line. If the RSI makes a breakout to the upside, this could help the price break its downtrend as well. There is such a correlation between RSI and price. When we look at the Vortex indicator, we see that it is a highly effective indicator for determining trend direction. This indicator usually consists of 2 different lines, a blue line and a red line. When the blue line is up, it indicates that an uptrend is prevailing, while when the red line is up, it indicates that bearish pressure is dominating the market. Currently, we can see that the red line is on the upper side. This indicates that the bearish trend is dominant in the market and selling pressure continues. However, it should be noted that such indicators can give a turn signal from time to time. So even though the red line is currently on the upside, not every decline lasts forever, and after a certain point, a trend reversal may occur. If the blue line moves back up and above the red line, this indicates that the trend is about to change and the uptrend may begin. These trend reversal signals provided by the Vortex indicator are very important and can be used to catch turning points in the market. At the moment, the red line is still on the upper side, so the bearish pressure continues. However, if the blue line starts to accelerate upwards from below and crosses the red line upwards, this could be a sign that the price is changing direction and the uptrend has started. Thus, we can easily understand the trend direction by looking at the Vortex indicator. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.